DeFi, like, that's not as powerful a why as the largest investors in the world are now allocating to crypto in size to the tune of like $40 billion a year in ETFs. Or we now have crypto regulation that lets Wall Street interact with crypto. Those
The traditional forces that historically controlled Bitcoin's ups and downs seem less potent now as market dynamics shift. Slower moving, but far more important tendencies take their place. The adoption of cryptocurrencies by institutions is one such trend that saw a major uptick in activity, following the creation of the Bitcoin ETF in 2024. Over the next 5 to 10 years, this has opened the door for consistent inflows that may help sustain structural growth. In addition to this, crypto regulation is starting to create a more encouraging atmosphere with long-term effects. Even while the conventional four-year cycles haven't completely disappeared, the combined forces of these decades may turn out to be more powerful. In light of this, there is growing hope for 2026 and a positive outlook for 2027. Bitcoin is currently trading between $115,000 and $117,000. As of August 8, 2025, driven by institutional interest and regulatory tailwinds, following U.S. regulatory developments, like as an executive order permitting cryptocurrency investments in 401k plans, there was a recent rally that caused the price to rise 1.4% to over $1,117,500. Analysts point to minimal sell-side pressure and good support around $114,500, indicating a potential breakout. ETF inflows are still strong, supporting the idea that Bitcoin is a digital gold and gaining more credibility through regulated investment vehicles. The elements that drove Bitcoin's historic four-year cycle are still present, but they are less powerful, according to Bitwise CIO Matt Hougan, who made this explanation in a recent interview. Rather, he believes that broader, slower, decade-long factors like institutional adoption and advantageous regulation will take center stage, perhaps making the upcoming years some of Bitcoin's greatest to date. Here are some snippets from Matt Hougan's interview. This is a crucial video that you should not overlook. For more videos like this, please subscribe to the channel, watch, like, and share this one. You can also enable post notifications. We appreciate your return visit. You make a valid point.
those are much bigger whys than we have DeFi or we had ICOs and Ethereum, which was like the last cycle why. Yeah. The first cycle was people can buy Bitcoin. That was a big thing. But we just learned, and then we had the 4-year cycle after Mt. Gox blew up. But the last two, there wasn't a reason to expect it's different. I do think this time there are those two reasons, which institutional purchases and regulation. And I just think those are very big factors. I don't mean to steal your childhood blanket. What would I say to that? I would say just attenuate your action, right? Like the risk I see for people who feel strongly that this 4-year cycle will repeat is that they'll step out of the market and then the market will pass them by. And that will be a real challenge. And so to the extent that people are planning to do that, maybe do it in half or maybe do it at a lower level to make sure you have, and I know most real hodlers do this, they don't step out of the market, but make sure you maintain sufficient exposure that if these two factors, institutions and regulation really do change the game, you're not at zero. But look, no one cries that much over taking profits on a position after a good 3-year run. So I'm not against that. I would just say be open to the idea that this time it's different. It's happened 3 times. That doesn't guarantee it's a fourth. It hasn't happened 50 times, right? It's happened 3. If you imagine flipping a coin, you can get 3 heads, but that doesn't mean the fourth one will be a head. So I would just say, yeah, it just be open to the idea that it may be different. I agree. I think the analogy I like to make is like the Facebook IPO, more so than the internet bubble, because the internet bubble is so charged with emotion. Like if it's 99, we're panicking. If it's 96, we're running into it. If it's 2002, we're buying Amazon stock. But the Facebook IPO is more to me like the Bitcoin ETF launch, which was prior to the IPO. Wall Street was very skeptical of social media and very skeptical of this business that didn't really generate revenue from ads. They didn't understand its value. And it came to market and sort of went nowhere for a while. But it came to market at a $100 billion valuation. Today, it's 1.7 trillion. That's a 17x return over 13 years. That's not really bad. Is Facebook as exciting as it was when it was just on college campuses and you had to be in the know? Absolutely not. But did 90% of its value accrual take place after the IPO? Absolutely. So is Bitcoin as fun as it was when it was on message boards and P2P meetups to buy it? No. Is it as volatile? No. But is most of the value accrual still to come? I think that's the case. Could 90% of its value accrual still be to come? Absolutely. Could it 10x or 17x like Facebook did from here? Absolutely. So I think that Facebook IPO moment is akin to the Bitcoin ETF moment, and maybe that's the pattern we should expect, which is like something like a somewhat boring grind higher, but grind a lot higher, right? Not like 100 to 200K. This is 100 to a lot. And I think that's the paradigm that my mind is in.
There are issues with the 4-year cycle argument nowadays. Every cycle, the impact of halving is diminishing, and over decades, it might not matter as much. Major shocks like FTX appear less likely to occur now that rates have changed from previous increases to possible decreases. By early 2026, institutions that have begun investing in Bitcoin through ETFs may start to buy. This implies that while there may be sporadic declines, overall cryptocurrency doesn't feel exuberant and isn't resembling 2017 or 2021. According to the Viewpoint, the majority of institutions still do not possess cryptocurrency, but this should alter as market structure and regulation develop. With bipartisan support and increasing institutional interest in ensuring the long-term sustainability of cryptocurrency, Bitcoin's position as a macro anchor is still intact. Let's go back to the interview with Matt.
That's a funny circle and a good example. Look, I think they're interstitials, and I feel that way about my own business, right? Like, why do we need an ETF to own Bitcoin? I have a really good answer for that right now, which is the existing pipes don't fit for Bitcoin for most investors to own it in the way they own most of their assets, and it's just too hard, right? An ETF makes that push button simple. Why do I need Bitcoin in a truly blockchain oriented financial system where self custody is easy and has good UX? That's a much harder thing for me to answer. So I think the answer to your question is it's just interstitial. We did build a fails and now people are like putting things on it, but we're not all the way to the mature end state when we won't need a Bitcoin ETF, right? I'm comfortable saying that. I still think there'll be asset managers that supply IP, but we won't need these interstitial wrappers. And I think that's what you're seeing with the MicroStrategy on Solana. Although that is a really fun circle. Yeah, that's an interesting framing, and bandwidth is an interesting argument for why the last cycle started, right? Or stopped rather. We sort of hit the limits of what we could do. So that is an interesting framing. I do think,
Right.
I think the technology is getting better, but it does have to run ahead of demand. I think that's a fair thing to say, and it could be a limiting factor on this cycle. So yeah,
Yeah.
you're giving me things to think about. I think it's a good question. I think maybe I'd tweak the question to be like, do sufficiently decentralized blockchains support that?
Yeah.
Or are we going to get almost blockchain and name only support to support? I love that cut. It's a very good cut. I think that's true. And there are lots of questions about the centralization or not of various layer twos. I think it's unknowable. I think they're going to experiment with everything. I do think it helps that many large firms have launched on ETH as an example with tokenized products. So it's sort of gotten a blessing. But look, I think they're going to experiment on all of these. I think they're going to experiment on private networks, on quasi-private networks, on ETH, on Solana, on Bitcoin layer twos. I think they're going to experiment with everything. Is my base case. But I don't think anything will slow down the stablecoin train unless we get to the point where fees to move it just really blow out, which I think at the scale of growth that even the US Treasury is expecting, which is like 3 trillion of stablecoins in 4 years, I think the existing networks could scale to handle that. It's not overnight. It's not the same pace of growth that we saw in like NFTs or DeFi, which really broke the back of blockchains. It's a little bit slower than that, but I think they'll be able to scale to keep up. We'll see. I think it's the same growth curve, just at different phases. It's an exponential growth curve. It's just that the sort of bank wirehouse institutional curve is so far down that now the doubling is very visible, right? Like we've seen a steady acceleration. We're past the hockey stick point. I think nation states are moving in that direction, right? It's not just El Salvador now. We had Pakistan a little while ago. We have Bitwise is talking to multiple sovereigns. We had Abu Dhabi. We've had a few others. I think it's moving in the right direction. We're just earlier in the doubling phase. But look, I think if the U.S. actually buys Bitcoin, I can't imagine what that does to the price or to the game theory of other countries moving into the space. I think it would be. I don't think that's priced into the market at all. Yeah, the ship of Theseus, the sort of
Yeah.
the ship that sets off and you replace one plank at a time, and you end up at the other side of the ocean, and none of the original planks were there, but the ship is still there. It's still the same ship. I think that's like Bitcoin's journey right now. You mentioned at the top that there was this like early OG energy that was more revolutionary than evolutionary in Bitcoin, and some of those people are not happy that BlackRock has a Bitcoin ETF or the US government owns Bitcoin or that it's entering Main Street and Wall Street. And so they are leaving this ecosystem or cashing out because it's no longer the Bitcoin that they fell in love with. And they're being replaced by other people that are later adopters and maybe more comfortable with Bitcoin today than they would have been with Bitcoin in 2010. That gives some people pause. I think that will continue, right? I think that will continue. I think some of the OGs will continue to sell and new institutional owners will buy it. And the nature of Bitcoin will change slightly. But I don't think the core of Bitcoin will change. So I don't think this ship of Theseus transition will change the fact that Bitcoin is strictly scarce. I don't think it will change the fact that you can hold Bitcoin without relying on a government or a bank. I don't think it will change the fact that no one person can dictate how the chain works or change the terms of service. I don't think it changes that Bitcoin separates state from money for the first time in real history. It just speaks to the evolution of this space. So I think it will keep happening. It's one of the reasons the price isn't already $250,000 given all the demand. And we should say thanks to the OGs that are cashing out. God bless them. And we should all keep building in Bitcoin at the same time. Thanks so much. This was a lot of fun. Come to bitwiseinvestments.com. You can sign up for my weekly memo or find me on X at Matt_Hougan. It's got that funny U in it, Hougan. But that's me.
The typical 4-year cycle has been disrupted by the growth of cryptocurrency education throughout colleges. Institutions take their time, making long-term investments while taking the following 10 to 20 years into account. Regardless of market fluctuations, an institution will keep buying and holding once it enters a portfolio. ETF flows are a great illustration of this pattern. As Matt Hougan noted, they anticipated $50 billion in year 2, $75 billion in year 3, and more in year 4 after seeing $35 billion in flows in year 1. Institutions investing in cryptocurrency and the growing use of ETFs are the main drivers of this increase. With ETFs and businesses purchasing a sizable amount of the new supply, demand for Bitcoin is surpassing supply. Long-term growth is probably going to be fueled by this demand, as well as Bitcoin's relative scarcity in comparison to gold. Due to certain factors including institutional allocation and regulatory clarity, the traditional 4-year cycle might not be replicated. According to Matt Hougan, these forces will triumph over conventional cyclicality, and people ought to be receptive to the idea that things might be different this time. He drew comparisons to the Facebook IPO, which, in spite of early opposition, was incredibly successful. Even while Bitcoin isn't as volatile as it formerly was, its value can rise over time. The demand for financial products like exchange-traded funds ETFs may decline as the market develops. However, for the time being, they are offering efficient routes for investors to access Bitcoin. As we draw to a close, the key query is, which one factor do you believe will affect Bitcoin's price the most in the upcoming year? Macroeconomic patterns, institutional adoption, or modifications to regulations? Kindly provide your thoughts and insights in the space provided for comments below. In order to see more videos like this, make sure you like this one, subscribe to the channel, and enable post alerts. I appreciate you watching.